What is good, YouTube? It's your boy Sam, and I am back with another banger. This one is going to be a little bit more interesting than the past videos. It's still a basic video, but more complex than what we've been talking about. And if you've been following, okay, this basically led you up to this point to better understand some of the things that we use when it comes to trading. Okay, so today we're going to talk a little bit about resistance and support lines. This is very important, and this will also tie in some future videos in which I will be talking about some indicators. Okay, and some of my favorite indicators: Bollinger Bands, RSI, MACD, visible profile, visible range, just a whole bunch of different things. Okay, and I'll have visuals for you on those videos, so make sure you stay tuned and you follow our journey as we discuss some of these topics. So, what exactly is a support line? So when it comes to trading, a chart is a very good tool to use to understand what a stock is doing. Now, I know that sounds pretty obvious, but that's the most basicest thing. That's the most basicest tool, is the chart. Without the chart, what are we looking at? You're just looking at a random price. That could just be any random price in the universe. Versus looking at a chart, you can kind of see what the stock has been doing. And with the more knowledge you have, the more you understand what you're looking at, you can see where the stock is going, or you can better predict where the stock is going. And that's what you're going to use to be able to execute your trades and beat those other retail investors that don't have the tools or the knowledge that you have. Now, if you show somebody who does not trade stocks or any currency at that matter, and you just randomly show them a chart, they'll be like, what am I looking at? I just see a bunch of scribbles, I just see a bunch of lines, and that's pretty much it. Now, if you see my other video where I talk about candlestick charts, or what a candlestick chart is, that is one of my favorite charts to use. It just talks, or it just shows a little bit more in depth of what the stock is actually doing, and it gives me better predictions of what I believe is going to happen. Okay, so if you haven't seen that video, make sure you go check it out and understand what a candlestick chart is. However, for this topic, you don't necessarily need to use candlestick charts. You could use your basic chart, but a candlestick chart is going to give you a more clean look as to what you're looking at. Okay, so when we say support and resistance lines, what are we talking about? So basically, there's a lot of trading that goes on at what we call a support level or a resistance level. Now, where is this resistance or friction coming from? It is coming from other retail investors, other institutions, people looking and identifying patterns at similar price ranges to where the market fights at that price. And so we can expect to see it treat the stock price kind of like a wall or a barrier, I would like to use. Okay. Now this barrier can either work for you or work against you. Okay. So let's talk about support lines. Okay, support lines, it acts as a floor. So this is what a stock uses for support. Hence why it's called a support line. Okay, it acts like a floor, and even when the stock price comes back towards the floor, if you understand what a support line is and what it does, and you have identified where it's at, you can understand that there is a higher probability that it's going to reach that range and go right back up and use it as a support to go even higher. Okay, and this is also how you can better identify trends in terms of which direction the stock is going. Because to an untrained eye, it's just going to be a bunch of flickering prices and random scatter. But when you understand where your support lines and your resistance lines, which essentially acts as a ceiling to where it would prevent or provide extra resistance to where a stock would essentially touch and come back down, that can also save you some losses and also give you a better opportunity to enter in that stock as well. Okay, So that's essentially what support and resistance lines are, right? It's just a lot of trading going on in that area, and we can expect it to not necessarily breeze by that point. And if it does breeze by that point, that can also be an indication as to the resistance lines being weak and the stock being very bullish to where it is going up, or very bearish to where it's coming down. Now, there are many ways to identify where your support and resistance lines are, and because people have different trading strategies, and this is what makes the stock market so complex, people will have support and resistance lines at all kinds of different levels. With that being said, okay, let's use Chipotle Mexican Grill. Let's use that company as an example, right? Symbol CMG. So CMG is trading at $100 a share, okay, and it's bouncing between those prices, right? $100 a share to $101 a share, $102 a share, $99 a share, $98 a share, right? That's a normal range of operation for a stock that's trading sideways. And when I mean trading sideways, we haven't identified yet if it's bearish, if it wants to come down, or bullish, if it wants to come up. You can use its previous patterns or what it's been doing in the previous events to understand if it is likely to use a range as support, so where if it breaks it, it will treat it as a floor and shoot up, or it might not be able to necessarily penetrate that level, and it adds a lot of resistance and dips down, and we can treat it as a ceiling, and we know that is our resistance line. So that is where you know, okay, this stock is coming back down. This has acted as a resistance line, or this stock is going to shoot back up because it's been trying to penetrate these zones. It has failed to penetrate the zones, which is good if you're bullish, and it will use that as a floor and shoot up. So that gives you a better visual representation of what exactly that stock is doing. Okay, and what that basically is just a bunch of orders. If you notice in the previous videos, we talked about different type of orders being placed. You got your market orders, you got your limit orders, you got your stop losses, you got your trailing stops. These are where support and resistance lines are being placed. And that is why it is very easy to follow those patterns, or we can understand why there's so much friction in these ranges, right? It's not just, just people deciding that very moment, okay, this is what I want to do. You have people who have put in their limit orders based off of visual illustrations of previous charts to where they believe the next support and resistance lines are going to be. So we use CMG as an example. CMG is trading at $100 a share. Okay, a lot of people might say, okay, I've seen CMG trading below $100 a share, let's say for the past 3 months, or maybe even the past year, right? So support and resistance lines, they go across a broad time frame. Okay, you might have a resistance line within a resistance line, but that's based off of what your time frame is. Okay, so with that being said, if you notice that in the past year, CMG has not passed $100, but it's tested it. By tested it, meaning it's gone up to those levels before in the past, never broke it, right? And when I mean never broke it, I mean consistently stayed above it. Like it may be $100 and it may go above $100, like $101. Doesn't necessarily mean it broke it. You would need for it to break out and use that as a floor, as resistance. If it hasn't done that, or as support, if it hasn't done that, then you can basically put your imaginary resistance line there. And all resistance and support lines, they're not going to be imaginary, but they're pretty much invisible. Like you can draw it on your chart, or you can have different indicators that point them out and show them on your chart. But not everybody sees the same thing. It is based off of the patterns that you've observed, or a visual illustration that you're able to break down. Or maybe a visual illustration that many retail traders agree with, which is why there are so many limit orders placed at those levels. So it's not that people are choosing to be difficult, or people that are, let's say, bullish. It's not that they don't want it to break $100. They may want it to break $100. but don't know they're going to pay $200. And so when they put their limits there to buy, right, it's just a lot of orders to fill. And some people might think it's bearish to where now you have the bulls, the people who think the stock is going up, and the bears, the people who think the stock's coming down. They're treating it, one person is treating it as a resistance line, one person is treating it as a support line. And so there's a lot of buying and selling, buying and selling, buying and selling at that level until, let's say there's a clear break to where the buyers overpower the sellers, and now this thing's trading at $101, $102, $103, $104, and it shoots up. That is when a stock rallies, and you could essentially get in on that rally. So that's pretty much how it works. Make sure you stay tuned, right? So like, comment, share, and subscribe, and we can talk more indicators in the future or discuss whatever it is that you guys want to discuss. Thanks for tuning in.